Hey friends, things are finally starting to look a bit better. Today we're going to take a look at some extremely exciting topics, especially when it comes to Bitcoin, I have to say. I find that really exciting. Unfortunately, we broke down a bit here, dropping to $80,000, which is pretty rough. What's important to me is that we don't break through the $74,000 mark and fall below it, because otherwise you could still see this as a higher high. But if we cross this low here, then purely based on the chart patterns, this uptrend would also be over. Because, sure, we've already broken through the 50 on the A on a weekly basis. That's really not good. You just have to say it. But it would be good if at least other zones hold and we fight our way back. Because the last uptrend, the last bounce, that really wasn't bad at all. And here I really have something exciting to show you. If you now look at the whole thing purely based on the Elliott wave method, theoretically it looks like this was the top in 22, the corrective 2 of the bear market. Here we would then have a 3. This was our top here at $120,000. That also worked out perfectly at the 1.68 of the Fibonacci. From there, we then saw the trend reversal, entered here, and we really worked through these zones perfectly. So exactly according to the Elliott wave method, this looks extremely good here. So here we potentially still have a bit of room to the downside, could go down towards $70,000 again, purely based on this Elliott wave method. But if we don't fall below $65,000, then the next upward trend would be towards $170,000 and more, because this is just a calculation purely based on the Elliott wave method. And you really have to say, from a long-term technical perspective, this doesn't look bad at all. Currently, you generally have to say, what's really nice about the market is that we're getting more and more signals that this is probably the bottom. Because on the one hand, we're extremely low on the fine goods index. We can simply see that people just aren't interested anymore, which is understandable. I can understand anyone who's currently pissed off with the market. But what's even better is that now that Bitcoin has risen a bit, we've seen inflows into open interest again. That means this is also a sustainable increase, so from $80,000 to $85,000. This was really a sustainable increase because at the same time, we see that the funding rate is slipping into the negative. That's extremely important because the funding rate indicates whether there are more longs or shorts at the moment. And if we have such an imbalance now, it means that everyone is currently shorting. No one is going long here anymore. And that's always a good sign because that's exactly when a trend reversal can finally happen again, since the market makers always want to do exactly the opposite. That's already very good. That means, first of all, this upward trend was sustainable, plus most retail traders are capitulating. They're capitulating, selling, or opening a short position right at the worst possible moment. On the other hand, we also see the top traders on Binance and they're currently going long. I also like that quite a lot because you know exactly what it means when they go long. When they go long, they've already thought it through, and that could of course bring us the next upward trend here as well. And that's kind of what we've noticed lately, because clearly we've really broken through certain zones with Bitcoin where you have to say, okay, that's really bearish. However, we've now really seen a retail capitulation. And in that sense, that's actually extremely good. Every indicator is currently showing us that we're extremely oversold right now. Here with the stock RSI, we can also see very clearly that we're in this area, and these are really prime market signals. That means I simply tend to think that we could see a bigger reversal here again because we are absolutely oversold here. And here we can also see that we're currently oversold because US liquidity isn't coming into the market. That's what's kind of breaking Bitcoin's back at the moment. On the other hand, we have a huge gap between the M2 money supply and Bitcoin still has to catch up to that. Normally, Bitcoin should catch up to that and adjust itself again to the M2 money supply. And just if that happens alone, we'd be back at prices of $160,000, $170,000. And that's what's interesting, guys. If we don't fall below $65,000 now, then purely from a long-term technical perspective, based on Elliott wave analysis, we would enter wave 5, where we would really see prices at $170,000 and higher. Either that happens, or we fall below $65,000 and slip into a bear market. One of the two is bound to happen, because we're currently so oversold. I simply lean towards a reversal. And in the case of a reversal, the most important level will be breaking the previous all-time high. If we break through here, we should rise towards $170,000 or higher. That would mean we're targeting wave 5. I generally say this is one of the most important charts you can look at regarding this whole topic. Here we have every cycle. You have to say the first cycle is a bit hard to compare because it happened very quickly and there was hardly any liquidity. That means pushing Bitcoin wasn't really difficult. But if we look further down here, we can see that there was an expansion of liquidity. You should especially take a look at these two cycles. This 2017 cycle went completely parabolic. About 17 months after the halving, we saw our top. Here, 18 months after the halving. You can see that it actually always happens at roughly the same time. But what you have to add is take a look at the liquidity inflow down here. We saw a significant monetary expansion, liquidity flowed into the markets. It's logical that Bitcoin would pump as well. Plus the halving effect, of course Bitcoin has to set new highs. Same thing here. During the bear market, we really had tough times here, hardly any liquidity. Liquidity was even being withdrawn from the markets. But then it went parabolic. That was the corona uptrend. We got an extreme amount of liquidity into the markets, and we really set our new high here 18 months after the halving, which was absolutely huge because we had massive liquidity flowing into the markets. Only this time, that's just not the case. I mean, sure, we've still gone up, you have to admit, especially because we now have the big institutional players involved, but we don't have liquidity. Throughout this cycle, we've really had tight liquidity the whole time, mainly due to inflation and so on. Especially in the US, we've just had tight monetary policy the entire time. That's only starting to change now from the 1st of December. And this graphic just makes that a bit clearer. So, in every previous cycle, we've had a reasonable expansion of the money supply, just not this time. And that's why we should probably say goodbye to the 4-year cycle, because the 4-year cycle only lined up because we also had an expansion of the money supply then. Because actually, for example, you also have to look at the last cycle. Here, we basically set the all-time high, but then we went even higher here. That's why people refer to this as the top. But actually, the top was here. First, we had more volume here. Second, take a look at this. Around the top here, we also reached the top here. After that, the money supply tightened a bit, but it was still manageable. Because we only reached this top because Elon Musk tweeted about Bitcoin back then, and that caused things to go parabolic again. They really beat the advertising drum one more time. Then it really shot up steeply again. But actually, in terms of liquidity, nothing more was added here. That's why, in the end, liquidity perfectly predicted this top. And currently, we simply don't see any correlation with liquidity. So even in 2017, you can clearly see here that we were roughly near the liquidity top. From this point on, Bitcoin only went into a bear market, and so did liquidity. How incredible is that? It really all just depends extremely on liquidity. When it comes to altcoins, I don't even need to tell you anything. With altcoins, everything depends on liquidity. But even with Bitcoin, I just showed you. If you overlay the cycles, the Ferris cycle matched up perfectly with the liquidity inflow. Just not in this cycle. And that's why, in my opinion, this 4-year cycle is no longer applicable in this cycle. The cycle is different anyway. We're rising differently. Plus, we've already broken the all-time high of this cycle before the halving. That's never happened before either. This cycle is definitely different. Besides, we have some exciting things coming up this week, like the PPI inflation. That will be very, very interesting on Tuesday. Then on Tuesday, we also have retail sales figures and consumer confidence data, which are also very important. Wednesday will be even more exciting, the US GDP data for the 3rd quarter. That will be really interesting because after that it will be decided again. Will we see further interest rate cuts or not? Because that's what's been weighing us down lately. Currently things are looking very, very good again, so that we might actually get interest rate cuts in December, and that's extremely positive. But a few days ago, or rather in the past few weeks, it looked more like we wouldn't be getting any further interest rate cuts, and that's why the markets reacted so strongly. But now, the numbers this week, especially the GDP figures, will be extremely significant for the upcoming interest rate cuts. Because interest rate cuts will definitely have a really positive impact on the market. Whether you're bullish or bearish right now, interest rate cuts would help us get out of this situation a bit. PCE inflation data is also important. Otherwise, the other data is important too, but nothing is as important as this Wednesday really. That's when the most exciting data comes out because it will really determine inflation, further interest rate cuts, and the labor market. And only if the labor market remains stable and strong will we see further interest rate cuts. And interest rate cuts on December 10th would definitely trigger the next bullish reversal in this market. And right now we're on a good path toward that.